George, we are unmuted at the moment. Sorry.
My goodness, that's bad. All right. Good day, traders. I trust you are well. Apologies for speaking into a muted mic. But here we go. I trust you can all see my screen. We have a short time, of course, but I really want it to be interactive. If you have questions, pop them in, and I will get to all of your questions. Now, what I've put up here is just 9 markets. It is the beginning of the month. And, we all got to just take a little bit of time to get a sense of what has happened, especially in the, month that has just preceded us, and get a sense of what the market has been doing, and hopefully it can prepare us for either continuation of the same thing that the market has been doing, or maybe changes at certain levels that we need to be aware of. So if you have a look, this is Euro Aussie. So it's a mix of currencies, commodities, and indexes. And again, I think if you take what I'm sharing with you, you can apply it to any market and be able to use the price action insights into how you trade. Big blue line, everyone always asks me, that is that is the EMA that I use. And if you said through last week's Elite Traders panel, you might have picked me up saying it, but if you haven't, the reason that I use it, not much scientific breakthroughs here, but I've just found from experience that it closely approximates a trend. I mean, a strong trend, instead of drawing lines, you just use a 10 EMA, because trading off the 5-minute chart, you can be pretty busy and you can be deleting things, putting things in. If I just use a 10 EMA, it turns out to be good for me. You can try anything, try the 8, try the 12, doesn't matter. Whatever works for you and your strategies, that's fine, consistently applied. Euro versus Aussie. Now, if you look in this is the daily chart, but this is a month, of course. Now, month started here and ended here. So Euro Aussie bull trend for the month. Bull breakout, beginning of the month, and then went sideways, trading range, and then another bull breakout. Now, what is important is, as a trader, you've got to decide how you trade. If you only trade trends, big tick, 100% in support of you, then you just wait for trends, right? You'd have tried to get into something here, depending on what you do with your stop, could be in, could be out, and then here is another reward for you. If you only trade ranges, this is on the daily chart, of course, and the same mindset is applicable to whatever time frame that you trade. If you only trade ranges, that's where you would be in, thriving, selling at the top, buying at the bottom. If your strategy is a mix of everything, well, you're in everything, seeing what takes place. Remember the big word, fractal, Fractal. Markets are fractal, which means whatever you see on this daily chart, the patterns will repeat themselves on the 4-hourly, hourly, 5-minute, 15. 1-minute chart, if you want to trade that, weekly chart, monthly chart, they're all the same pattern. So that is what will happen with euros. Now, going into this month, you got to be thinking to yourself, let me get a nice laser pointer. Got to be thinking to yourself, well, are the bulls strong enough to break out and continue with the bull trend? I mean, you got to think that there's a higher probability that's going to happen. Why am I saying that? Well, because the last, few days, couple of weeks of the month that's gone by, October, pretty strong for the bulls. So the bulls, of course, would love that to continue to go ahead. Of course, bit of a problem into the end of the month, tails on top. Could have been just profit taking, bulls been buying, saying, end of the month, let's take profit. But of course, bears are in the market trying to reverse the whole thing. I didn't put up the whole chart because, days and months before to see previous levels. But let's look at the most immediate price action. So you're going to be thinking, we trended, bulls might be strong. If the bears come back, if I was trading this on the daily chart, I would also be thinking, if I get a reversal pattern in here somewhere, the bears want to test the breakout point. So I might have a bear trend after, after a reversal pattern sets up, might be selling. So this is good chart to be looking for trends, bulls or bears, depending what happens with either continuation pattern or a reversal pattern. New Zealand yen trading range for the whole month. You know, even if you were a range trader selling at the top, I mean, you'd have been hard pressed to make money here because it's not like off the top, off the bottom. You know, it's gone sideways. So, you know, you gotta look into the next month and say, unless something dramatic happens, what is something dramatic from a price action perspective? Well, you've got the highs of the last month, the lows of the last month trading range. Something dramatic is the bulls deciding, well, for whatever reason, we're going to take control of this market. They break out above the trading range like they did here. The bulls broke out of the trading range and beautiful trading range. Beautiful bull trend. Same thing here. The bulls could take over the market, break out and continue. Or the bears could break out beneath the low of the trading range and then just go for a measured move, the height of the range all the way down. So trading range market expects a breakout. Wait for a breakout. How long you have to wait for? You gotta wait for the market forces to show you what's going to happen, and then you follow them. Now, the interesting thing about these markets, I think you got to bear in mind, you know, this is the Kiwi versus the yen. So when you look at other Kiwi crosses or yen crosses, have a look and see if the same thing is kind of repeating itself. Pound versus dollar, beginning of the month, bears were like, man, this is beautiful. Let's sell, make a lot of money. And guess what? They sold here, depending on where they put their stop. They could have sold beneath that, pretty good for you to sell as a bear. And they could have sold beneath this bear candle. End of the month, even if they sold there would have still been a bit of money. Those guys made a bit more money. I don't know if, you would have wanted to sell beneath here. If you did, appropriate stop, you still be in a bit of money, just, below break even. But we entered into a tight trading range, sloping downwards. But, the bears are still strong. And why do I still say they're still strong? Bear in mind what I said about how I use the 10 EMA. Well, the bears are strong. They haven't allowed the bulls to close above that. Here, fairly balanced market. Bears were strong. Bulls came in at strength, went sideways, balanced market, and then broke out. So at this particular point in time, the probabilities favor the bears to carry on. We have a tight trading range. They tried to break out here, they failed. If they can break out here with a decent enough candle and then follow through, you can expect a lot more selling in the cable pound versus dollar market. But because of the trading range, wait for confirmation of what's taking place. This market is interesting. Gold, we spoke about it in the Elite Traders panel. If you haven't seen those videos, go and have a look and see the price action thoughts about what could happen with gold. That's quite an interesting thing. Anyway, in any case, the market opened here and is closed here. So it's been pretty bullish, and it's been a bull market for as far as gold is concerned. But when you look at it, bears are pretty strong enough to force, three candles, inside candle, follow through, etc. Then the bulls came back and we got back into the trading range. The bulls are strong enough to push the market up. Now, where we're at, I would be thinking as a price action trader. This is, yes, it's a bullish market. It's above the EMA, but it's a higher high double top. That's a top, fail. That's a top. So far, we haven't gone far, got an inside candle, which is still good to confirm the top. So, some bears are going to say, well, I'm actually going to put a sell or the sell here. I'll use a measured move stop up here so that it feels I can get out with minimal damage. Or if I get acceleration down like I had here, that inside candle, I'll be triggered in and I can pull my stop down and manage my trade. So depending if you're an aggressive bear, you sell. You sell with a wide stop. If you're an aggressive bear, you don't sell with a tight stop because that's a little bit, that's beginning to think you're 100% certain that if anything will always go your way. It doesn't work like that. Okay, if you're going to sell aggressively, you need a wide stop. If you want a tighter stop here, wait for a bit of acceleration. Sell aggressively, wide stop. You want a tighter stop above here, wait for confirmation. That's how the markets work. So I'll be thinking higher high double top, but can only be a confirmed top if the bears follow through. This is good enough. If I was doing the daily chart, again, depending on how I trade, either wait for confirmation of the jumping or whatever the case may be. But that's fantastic. If you see a bear candle, where I'll be selling the breakout or wait for the pullback. You always can sell the breakout or wait for the pullback. Good for the bears, good for the bulls at the same time, but bulls have a problem. It's a higher low, that is problematic. So, let's see what happens tomorrow. Silver, micro double top, lower high micro double top, bears selling. I mean, when I come into the markets on the 5 minutes, I just have a quick look on what's happening in the daily, and I'm always marking low of yesterday, high of yesterday. So when I saw that, I was in the market when I saw that happen on the day, and I thought, oh, pretty strong for the bears. And then I put the low of yesterday and high of yesterday. And as the market did this stuff trying to get through the low of yesterday, you got to look for opportunities to sell. You got to look for opportunities to sell because you are down in the intraday 5 minutes chart as I trade, and seeing that, expect the bears to follow through. Just like when I'm going into tomorrow, while I trade what I see, if the market starts to go long, I'm going to look to go long with it. But if I see a bear setup, a higher probability than the bull setup because of what's happening on the daily, I'm going to look to sell, look more aggressive. But I sell off my stories and patterns. But the mindset, the thinking is, okay, we're going to break beneath the low of yesterday. This candle was good for the bears, follow through from the previous day. This candle was good for the bears, but at that point, you could have been thinking, come a bear, why weren't they strong enough to accelerate down here? There's all sorts of reasons. I mean, it was the first Friday of the month, doesn't really matter, but it's non-farm day. Markets, they have dramatic stuff. Non-farm day is day after month end. And all sorts of things could be taking place to try and interpret that. It really doesn't matter from a price action perspective. What matters is micro double top, trading range, which means the bulls weren't strong enough. They tried lower high double top, follow through, fantastic. Bears control that candle. That's all that I'm really interested in. So if I was selling on the daily, I'd put a sell order here, but I want to use a wide stop. In this case, because I didn't take that first trade, I have a little bit more confirmation. I can put my stop here and then manage it depending on what happens in the day. Market opened here and market closed there. So, slightly controlled by the bulls, but the bulls they should have closed somewhere up here. So this market is pretty bearish. Look out for those opportunities. Brent crude, I mean, the bulls were salivating and celebrating when this happened. The previous month, they closed with an inside candle, had a little bit of a doji as well. Okay, we still control the body. And then, boom, beginning of the month, beautiful outside candle. Bears tried to sell, reversed. Bulls closed, controlled it, and thought, okay, bulls are just going to accelerate up. Could have bought above that, with the appropriate stop. Fantastic. You'd have been fine until you got out at the reversal. Problem for the bulls after such strength, kind of raises some alarm. Still take the trades, but manage them. Good candle, doji, good candle, micro double top, lower highs, and then we just end up in a bear channel. We opened in this area and we closed in this area. Just a little dodgy, uncertainty, trading range, but a lot more movement that would have allowed you to take trades because you don't know what's going to happen. So you could take a trade here, manage it well, get out break even, and wait a little bit more. You could have taken long trades here and managed them. But this market, it's got some proper potential to do stuff. Trading range, it's a slope channel. We connected that. We are in a channel. If the bears are strong, they want to break beneath the channel, which means break beneath the low, the open of the month, and accelerate down. Might go down just in the channel like that. Of course, if the bulls are strong, they're gonna try some of the drama that they had here, but they gotta do it with strength, right? With conviction, which should be fantastic. So if you want to trade this market, based on the strength of the bears in the channel. And you're saying, I'm in a channel from here to here, connect that, and you're selling here, you got to again put a wide stop, right? At the very least, if you want to sell here, your stop's going to be above here at the very least. You know, that's almost like a bit of a measure of move, maybe a little bit more. That's what you do. Would you buy? Of course not, until you get a bull candle, right? I say, of course, no, there's no 100%. Some guys can just buy it. I'm buying because, you know, it's a double bottom, high low, double bottom. Bulls can come in. I'll put my stop down here at the bottom of the earth. You can do that. You know, just manage your trades. NASDAQ, good market. Wow. Depends on what time you are trading it. Trading range, complete trading range. Opened here, closed here. Now, for the bears, they say, well, you know, we controlled that first candle, went sideways, bulls didn't do much, tried to break out, make a double top, failed, make a double top, 2 follow-through candles. So bears want to sell off this market. The problem already is beginning of the month, they failed to control that candle. Had they controlled that candle, that would have been absolutely fantastic. For the bears, you know, they're giving us a candle like that, or like that, or like that. Bears would have been thinking, if I'm just going in tomorrow, I'm going to sell. But what's going to happen tomorrow? Well, two thoughts. Either you wait and see what happens at the end of the day. You know, are the bears going to be strong enough to do something and control this and give us a candle closing beneath here? It'll be a big dramatic bear candle, right? Or are the bulls going to come in and force the market maybe into a trading range or start to go up? You know, if you get a micro double top, micro double bottom here, and the bulls control that next candle, you can look to buy the next day. If you're prepared to put a wide stop and you say, well, I can see that this area was defended, you know, I'm not going to be here to watch the markets, whatever. I'm going to buy if it goes above there, but then I'm going to put a stop down here. So if I'm wrong and I come back and we're here, I can get out the minimum risk. That's if you want to buy above a weak candle. Personally, I wouldn't. I would wait. If I'm going to sell here on the breakout beneath here, because I think the bears, you know, controlled the tail. So the small body is bullish body, but the bears control, you know, bigger part of the range of the day. If I'm going to sell here, I would put my stop up here. And then wait to see what happens. DAX 30, you know, this was the high of September, all-time high. Now we have an all-time high, which is at the high of October. But have a look at from here to here to here and to here. Bulls tried once, tried twice, in here, tried 3 times. So we have a pretty big wedge pattern, 3 pushes up. Within here itself, the small wedges, 1, 2, 3 attempts to go up. So all of this favors bears to sell off this market. But the problem is, of course, they were halted by the bulls at the low of October. So a little bit more needs to be done. Slightly better candle for the bulls. Would I buy here if I had to do something? Of course, if I had to do something, I'm going to do it, but I need to use wide stops because I don't want to buy here, put my stop here, and just get stopped out by working on the assumption that what I'm going to do is 100% of the market is going to do. It's not going to do that. You're buying a low probability trade, ignoring all of this structure, need a wide stop so that, you know, if other side of the risk happen, you can get out pretty quickly. Would I sell? No, I wouldn't sell. I'll just wait for confirmation. So on the daily chart, either buy with a wide stop because we're ignoring strength of the bears, or wait, just get a little bit more information before you jump into the market. UK 100, surprise. Guess what the surprise is? Well, look at this. I mean, if you look to the left, this market has just been ranging and ranging and ranging and ranging and ranging, going round and round in circles. What does that cartoon say? Going round and round in circles like Tom and Jerry. Getting pretty boring. And then, boom, we start to get some bear candles. Now I'm like, oh, are we breaking out of this finally? But of course, you know, short-lived euphoria by the bears, nothing much happened. So, you know, the way it's set up right now, higher probabilities that we get back into the range. and just keep on doing what you've been doing. Now, if you're a range trader and the range that the UK 100 provides you gives you sufficient for your return, this is beautiful. Be selling above here, use a wide stop and get out as soon as it turns at the bottom. On the 5-minute chart, the UK 100 or FTSE 100 is an absolute beauty. You're going to say, George, why would you say it's an absolute beauty with all of this stuff? Well, because it means the market goes up beautifully. It doesn't go up in just one candle or come down to one candle. It goes up in price action patterns and strategies and all sorts of things, and it comes down. So it's a high probability that in the time frame that you're in the market, it's either going to be swinging up or swinging down or just going sideways. So some days you do nothing, just leave it. But within the month, you would have probably been rewarded a few times if you follow this market. And just have a look at the highs and the lows and what happens the next day. All right, traders, I'm hoping that this gives you some insight into your trading in the coming week. Kind of hit the 20-minute mark. I'm looking to see if there are any questions. If there are no questions, well, I'm going to say have a fantastic time. Catch Jeff and Ash and my good self as a host in Trading Buddies tomorrow. And hopefully you will have a fantastic time trading. Sam, thank you very much for hosting. Thank you, traders. We shall see you again.